Shares of Nvda down pretty substantially over the last month, and it's making the indexes look pretty weak. So does that mean that Nvda is dragging the whole stock market down and causing a market crash in general? Well, I'm going to talk about that today and give you my analysis and give you a sense of where there's opportunity in the market and where you need to think about taking profits. And Nvda might be one of those places. So let's just think about the story here. Nvda has been weak since the topping signal of June 20th. And if you go back to my video from that date, you'll see that I predicted that Nvda was likely to go lower. Simple reason, the stock had gone parabolic. It hit a new high, closed below the open. Now that weakness was compounded by the building of a falling top. I'm going to show you this on a chart in just a moment. And then it broke down from a falling top in the last week or two. And that has led to more weakness. And what it's doing is it's dragging down the S&P 500 and the NASDAQ 100. And the reason is pretty simple. Those indexes are what we call market-weighted indexes, which means the biggest companies in those indexes, Nvda being the largest, have a much bigger weighting, and therefore they're more important. They shape the performance of the index. And what happens is investor psychology is often driven by what's happening with those headline indexes. So when you hear the S&P is down 2%, or when you hear the Dow is down 500 points, that makes people pessimistic, concerned, fearful, and that can bring on a crash. The reality in the market right now is actually that most stocks have been strong. I did a video last week that said we're getting this summer rally in small cap stocks. So there's a summer rally in small cap stocks, but in the large cap indexes, the S&P 500 and the NASDAQ 100, there has been weakness. So let's look at some charts to just emphasize this. So this is a chart of Nvda, and you can see here this. First of all, this was June 20th, and this is a parabolic trend, closed below the open. I call that a bursting bubble candle. It's a pretty strong signal that a stock is likely to pull back. Often you will get a sucker rally, which is called a bull trap, where you fail to make a new high and you instead move down from that falling top. Now, how far down will Nvda go? Well, typically in that scenario, it will pull back to its linear upward trend line. So we can see then that our target for Nvda, depending on how long it takes, is anywhere from 105, and if it takes a while, of course that trend line's moving up, it could be 110. Somewhere in there, Nvda will find some support. Now that doesn't mean that it will start to go up when it gets to that place. It's just a point where it should bounce a little bit and try to hold those gains. Now I want to emphasize, I think Nvda is a great company. I think it's been an amazing stock. And I think it's a stock that a lot of people have fallen in love with because the performance has been so good. But this isn't about whether Nvda is a good company, whether its earnings are strong, whether it's growing its earnings and income and that sort of thing. It's really about what is the price that is being paid for the company. Nvda doesn't go up forever. At a certain point, its valuation just doesn't make sense anymore. I don't know what that number is. I leave that up to the stock market to figure out. What I know is typically almost all hot stocks eventually stop when their trends go parabolic, and then they might go sideways for a while. They might even reverse and go lower. And you can think about Tesla, how strong it was a few years ago. It was the darling of the stock market. Eventually the bubble burst. Still a good company, still making lots of cars, but it's just no longer in favor. And I think that might be what's happening with Nvda. So is it touching off a general correction in the overall stock market, a stock market crash? I don't think so. I think what's happening is it's dragging down the indexes. So here is the NASDAQ 100, and you can see that it broke this linear trend line, which means it's likely to pull back to that trend line. That's quite a distance down. Now remember, it's not only Nvda that have had great gains, but it's also Apple and Microsoft and Google. These stocks are heavily weighted in this index because it's a market-weighted index, and therefore the largest companies have the biggest influence. And so because those stocks are all moving down, we can look at a few of them. Here's Apple. Okay, it's been pulling back for the last 4 or 5 days. Microsoft pulling back, Amazon pulling back, right? So these large companies are pulling that index down. But in reality, it's just money moving out of these large stocks and into the smaller stock names. So if we look at the IWM, which is the Russell 2000 small cap index, see how it's been making gains over that time period? In other words, money's coming out of Nvda, Apple, Amazon, Microsoft, and moving into the broader market. And that was, of course, the topic of last week's video. Make sure you're subscribed to the channel, because then you'll get alerts for all these videos that I put up. I'm putting up a few every week, and they're free, and I think they're fairly informative. If you like them, subscribe. If you don't like them, don't subscribe. All right, let's take a look at the market-weighted, or sorry, the equal-weighted version of the S&P 500. So this is the S&P 500 where every stock has the same weighting. And you can see that that performance over the last couple of weeks looks very similar to that of the Russell small cap sector, the IWM ETF. And that's because most stocks are moving up. It's just the large cap stocks that are moving down. So that's really the story here, is that you're seeing a crash or a correction in those large cap high flying stocks. Doesn't mean that they're going to go down tremendously. I think they just got overextended to the upside. And so we're getting that pullback. So it really appears that the market is going through a rotation of capital into the broader market at the expense of some profit taking in the large cap tech stocks, particularly those related to artificial intelligence. All right, let's get into some more charts and just do our general normal market analysis. Let's go back to the S&P. On the 1 month time frame, you can see that this market broke this little upward trend, but from a new high. And typically the way trends for a stock or a market reverse is they go up, they pull back, they make a falling top, and then they break down. Well, we don't have a falling top yet. So far this is just a pullback from the highs. So it's really a neutral looking chart. If we look at the NASDAQ and we go to the 1 month time frame, it's a little bit worse because you did have a little bit of a falling top before this weakness. But if we look at the 3-year weekly chart, you can see the trend is still up. We haven't broken the upward trend line. We're probably just working our way down to that upward trend line where it should find support, and maybe it'll just go sideways. Of course, it could on the weekly time frame go down, bounce in August, and then we could have a September correction as more money comes out of the market. Difficult to say at this point. For now, it's really just setting up for maybe a buying opportunity in some of these high-flying stocks as they get a little cheaper in the short term. Let's take a look at the Canadian market, T.XIU. And here you can see that it's been performing better than the US S&P 500 and the NASDAQ 100. And again, it's just this broadening of buying out of large cap tech and into the broader market, including the Canadian market. If we look at the short-term chart, it's generally trending higher. It's pulled back the last 3 or 4 days, which is quite typical, and it should come back to this trend line, bounce, and then continue higher. So I think that the Canadian market is a reasonably good place to look. Now we have the venture market, which is the really small cap market in Canada, and it's still kind of suffering. The retail trader doesn't have the same enthusiasm for the junior markets in Canada. If we look at the 1 month time frame, it had a little rally there as gold was moving up, and then this week gold started to correct. Let's take a look at the gold chart next, and you'll see that thing going on there. So here's the 1 month chart. Great rally in gold, and then it broke the upward trend line on Friday, and that sort of sets up for maybe a falling top building, or maybe we're just going to go sideways for a while. But I do think it's cautionary, and I do think we should expect perhaps, less strength in the gold market, and I would, lower my rating on gold to neutral on that. Let's take a look at the oil market, which also had been doing well for a little while. If we look at the 1 month chart, we see here this nice upward trend, but then we broke the upward trend, then we built a falling top, and this week, late in the week, we broke down from a falling top. So this pattern here is called a descending triangle. What does it mean? Well, what it means is when there's strength among the buyers, so here and here, because they can't get as high as they had the previous time, the tops are falling, And that's a sign of pessimism. That's a sign that the buyers are losing strength and the sellers are gaining strength. So a bit of a concern on the oil market, but big picture, we still have a fairly decent long-term chart. And I think all that's happening for oil is it hit resistance, which it's hit a couple of times, and it's just pulling back to the upward trend line, probably another week or two of weakness, and then it should bounce and make another attempt at breaking that upward trend line. All right, next chart I want to look at is the US dollar. We're going to look at Bitcoin in a moment. US dollar sideways here. If we look at the 1 month time frame, you can see it's volatile up and down, but looking at the 3-year time frame, or even, well, that's good enough. It's really just been in a sideways trading range for the last 3 or 4 months. Now let's take a look at Bitcoin, because it's had kind of a wild ride in the last little while. It had been quite pessimistic through June and the first half of July. And this week it managed to break that pessimism with a strong move to the upside. And if we look at the 1 month chart, you can see the downward trend line was broken. We built a rising bottom, and then late in the week, we broke up from a rising bottom. Now, one of the reasons perhaps is that Trump's pick for vice president, J.D. Vance, is pretty pro-crypto, pretty pro-new things, and that's probably giving some support to the crypto market. We'll see if that continues, but I do think that's an interesting turnaround. And it had an effect on the Bitcoin miners. So for example, HUT is a Bitcoin miner. You can see it's in a good upward trend. Riot is in that area, and it had a little bit of an upward move this week as well. Finally, let's take a look at the bond market, TLT, which is also trying to reverse the weakness. So remember, if this is going down, interest rates are going up, right? And what we see is that we were moving down through most of 2024. We broke the downward trend line in June. We've been building rising bottoms, which is a sign of optimism. And now, soon, I expect that we're going to break out. The market is expecting an interest rate cut by the US Federal Reserve in September. It could come sooner, but most likely it's going to be in September based on what the market is predicting. And you can see that the chart's building for that. It's building optimism, building on that expectation of a rate cut. So my ratings then, US large cap I've lowered to neutral because of the break of the short-term upward trend, but still long-term bullish. NASDAQ bearish in the short term because of that breakdown from a falling top in the short term. Again, that's just the very short-term chart, but still long-term bullish. The trend is still up. US small cap and Canadian stocks bullish on both time frames. Gold neutral in the short term and bullish in the long term. Oil bearish in the short term. It's kind of rolled over a little bit. US dollar neutral. Bitcoin, I've upped it to bullish in the short term, but still neutral in the long term. And then the bond market neutral on both time frames. All right, now I want to get into the trade of the week. This is an example of a stock that we traded in the Active Live service. You can learn more about Active Live at stockscores.com, my website. And one of the key things that I do every day in Active Live is build a list of stocks that have alpha. We call alpha stocks alpha when they are trading abnormal volume with strong price gains. And we've got algorithms that pick that out right away, right from the start of the open, even in the pre-market actually. And then we watch those stocks for good buying opportunities. Now, a good buying opportunity is largely about balancing reward versus risk. You know, I don't want to be a buyer when a stock has already had a run up. I want to be a buyer when it pulls back and breaks, because my downside is to support. So we can make support in red here. So that's support, and my buy point here and my risk, which I'll draw in blue, is the difference between the two. So the distance from the buy point down to support. Well, when you buy, you know, when you chase a market higher, if you're buying here and you've got support way down here, now your risk is much greater, which means the ratio of risk to reward is not as good. You know, in this instance, if you bought at this first spot, then your risk was this amount, and your ultimate reward, if you got out at the highs, which we never do, is about 1-to-1. However, if you waited for the break of the pullback to right here, now you're getting almost 3 times reward for the risk. And it's simply because the pattern is better. So one of the things we love to do is buy breaks of pullbacks, or the other buy signal on this chart was the break from low volatility. So when a market trades sideways, and remember this is a 1 minute, very short term chart, so for day traders. And so when you broke out to new highs after going sideways for about an hour, this breakout occurred at 10:31 Eastern time. Now you've got a really nice setup on risk reward. Your entry is here, support is here. And if we think about multiples of that, the market on this stock moved up many multiples of risk. Upward trend line broken there. That's a good exit signal. And that was good for, I don't know, 5 or 6 times risk. In other words, risk $100, make $500 or $600. Risk $1,000, make $5,000 or $6,000. These are the kind of trades that I love to do. It's a slow summer market. There's not a lot of these, but there's still 1 or 2, maybe 3 every day. You just got to focus in on alpha, focus in on the abnormal activity, and then look for the entry opportunities. If you want more information on how to do that, go to my website. There's a trader training section that you can look at, and there's information in there on how you can learn some of what I do and what I've been doing for about 30 years. Well, I hope you've enjoyed this week's Market Minutes. If so, please click the like button. It helps the viewership. And if you're not already subscribed, and many of you aren't, you're still watching it every week, but please subscribe to the channel. It helps the channel out, get a little higher profile. I want to thank you for joining me this week. Have a great week in the market next week. And as always, trade well.